Welcome to Bitcoin Escape Plan. Bitcoin is showing its first signs of weakness in this uptrend, and in today's video we're going to go over the key levels of support and resistance that will indicate for us whether the trend is done for or whether it is just a minor pullback before we continue on higher. Later on in the video we will go over the higher time frames just so we understand the historical context of how the price typically behaves in this time of year, and just to see if that lines up with what we're seeing on the charts at the moment. And at the very end I will talk about it from a perpetual trade standpoint just to see where should we be biased for our trading positions. If you are new to the channel, go ahead and check out bitcoinescapeplan.com. Every Monday I release an in-depth breakdown of all the levels that matter most. You can get that in your email every Monday at bitcoinescapeplan.com. Go check it out. I also release videos here on YouTube every Sunday, Monday, Wednesday, and Friday. Let's get into the video, bitcoinescapeplan.com. All right, so this is the first thing that we always like to check in on is the anchored VWAP. If you don't know what that is, go ahead and check out the courses tab over here where I explain it in more detail. Functionally speaking, these are magnets. So when the price behaves around the magnets, we need to pay very close attention to how strongly it reacts to it. So in this particular instance, didn't react super strongly, and that's what was able to pull us back above it. This is more significant of a response. Now, it's not enough to confirm invalidation yet, but it is a more significant response after another retest and a failure, specifically on the 4-hour SMA, which for the most part was curving up and we were still showing strength on it. We are now seeing our first signs of weakness there. So if we're taking a look at the general hypothesis that I've been sharing since like January, February, essentially, was because we had a break of these lower bands down here, I knew that we were going to head towards these middle bands. This is the Elder VWAP. This is the one I have drawn from 2011. It's the middle band. This is the downtrend anchor VWAP from the 126 all-time high in October. But they're essentially telling us the same thing for the most part, which is that the range between 80 and 83 are incredibly important for us to pay attention to. There's a number of other reasons for that on the higher time frame that we will go into later, but that's just the broader idea that we want to keep in mind as price is oscillating around these levels. Is we're not talking about just a random number on the chart. These are key psychological levels that are backed by technical data. So we have to be very kind of cautious about making bold claims that are not within the reality of what that data tells us, which what that data tells us typically in this part of the cycle is that we will be looking for this range to be validated either as support or resistance, and we should expect the price to react strongly to that information once that information is clear. So what we're looking for now on the short term, essentially, is now that we've seen another break below it, confirmed also by weakness of the 4-hour SMA, we have seen a break through the 79.3K Fibonacci pivot. Now, I don't think that one's that important, to be honest with you. I think 80K is more important right there. As you can see, the price, as I'm speaking, is attempting to climb back to 80K. 80K being, again, just a super important psychological level, but technically lower than that middle band of the anchor VWAP, which is sitting at 80.2K. Now that does not sound like a big difference, but it can actually be a significant difference. If we show weakness at 81, or 80 rather, it would be hard for the price then to escalate past where we need it to, which again, this is a magnet. If the magnetic field is too strong in this direction, we won't be able to break through, essentially. So at the moment, we have seen enough weakness to push us down lower and not be able to attempt, this is again the downtrend middle band of the anchor VWAP. What that's telling us is that 83 is still resistance at the moment. Now that may not be the case for long. This may just be a temporary pullback. What I would be expecting personally is we kind of have to zoom out a little bit past this. This could possibly drop a lot lower. I would say that 73.8K is the next most important psychological level. If we want to just take kind of like a stepladder approach, 78, 76, and 74 are all very important. But 73.8K is really, in my opinion, going to be the confirmation of whether this run is done or whether we are going to continue higher. That being predicated upon the higher time frame confirmation of 76.2K. So technically speaking, we can, for a period of weeks, go all the way down to 73.8K and show strength there and still bounce higher. Now, there are a number of things on the higher time frames that kind of invalidate that a little bit that we have to keep in mind. And that's, again, as I just mentioned, that 76.2K Fibonacci pivot is super important. If we start to lose that and have any momentum upon losing that, it becomes less likely that we are going to reclaim back above it, which again fits with the overall thesis of the channel in a bear market, that we are going to see a series of lower highs formed. This is the January 97.9K peak. It is hard for me personally to believe we are going to go higher than that this year. It is not impossible for that to occur, but it would be out of character for what we typically see at this time in the cycle, you know. So this is the monthly SMA. The monthly SMA is still curving upward. The only other example that we really have of that is in 2018. For the most part, it just continued to climb up into the right, chopped a little bit, but for the most part stayed pretty flat and just continued to rise. And kind of similar as well in 2014 into 2015, though we did see a sharp decline at one point in that cycle. So the possibility remains that as long as that continues to trend higher, technically speaking, the price will also be pulled higher. Now, what we don't have information of, nor do we really have precedent of, to be honest, is we don't have confirmation of, are we even going to get a retest, or are we going to fail before we are even allowed to have a retest? Historically speaking, we would expect a period of about 7 to 12 months before we see a retest. We are currently on month number 6. So that means either we're going to get a retest in the end of June, early July, which is a possibility. We have to accept that that is a possibility, that we're going to see a rise into July instead of a drop down before it. Which was my initial thesis, that we were going to top out by the end of April. That is not currently true, though. I don't really think it invalidates what I have said, because I was using those targets as targets, which was 80 to 86K. At the moment, that has not been invalidated. This is exactly what I said was going to be happening during this time. And I'm just waiting for confirmation of what's going to happen next, essentially. That's a lot of what I do on this channel, and with my analysis anywhere else that you see me write it, is I have a strong central thesis that is backed based on these statistics and the data that the chart tells me, as well as my experience just kind of paying attention to, okay, what are the narratives that they are pumping? What is kind of the second order effects of why they would want you to believe that narrative? And then just kind of letting the chart tell me what is going to happen. So what we would expect typically is that we don't have another interaction with the monthly SMA for a long period of time. However, typically speaking, once we do have an interaction with it, it's not that long before it breaks back above it. So in this instance, in 2022, 2023, we saw a break up to it, initial weakness for a period of 3-4 months, but then obviously dramatic upside. Interesting fun fact, this is the last time that leverage was this high in the market. So I think that's why some people are talking about they're seeing stocks are behaving like 2009. And for anyone who is not familiar with the chart from that time period, 2007 is the peak of stocks and real estate. They then all start crashing in over the course of 2008. That's colloquially speaking, that's what people refer to as the bear market, but they weren't paying attention in 2007. 2007 is a very clear sign of that. And then 2009 was the bottom for the stock market before it started to rise. So just imagine this is 2007 instead of 2022. And then it started to rise. The bottom for real estate being like 2011, 2012. So what they're indicating is that we are here essentially, and that we're about to melt up dramatically. And I don't think we have enough evidence of that yet, personally. I think it is more likely that we're going to see weakness before we arrive there. Though again, the important caveat being, this was the last time that Donald Trump was president. So he may just be trying to run a similar pattern where it's just harder for us to predict the price in a market cycle like this, where we did have, in this case, is a 72% drop, not a 51% drop as we had in this cycle, or 52, whatever, like around there. That the price did significantly break below that, though I'm sure there were narratives at this time. This is primarily the ETF narrative started to come up around that time. And I'm sure that people were just as turbo bullish as they are now, and yet the price still found a way to magically make its way lower at the end of the year. Now, this being predicated upon, this was a later break of the monthly SMA. We broke it last November, you know, like we've been in it for a while, or technically, I believe September, August. So we've already shown weakness on this chart, on this part of the chart, way earlier than we typically would. So there is a possibility that we're about to see this reclaim go back above it, and, you know, essentially miss out on an opportunity to buy Bitcoin at lower prices. So we have to acknowledge that that is a possibility. And what does that mean for the you know, the second order effects of what we could see in terms of the next time we want to buy heavily? So it's my personal belief, just based on paying attention to the chart, that anytime the price is below the weekly or monthly SMA is a good time historically to buy. This is the 2025 lows. Historically speaking, great time to buy. Now, right now, you would be in loss. And this is an important part of the narrative, is you got to think about the psychology of these individuals. These are people who are late to the party, but they got a ticket to get inside the party, and the cops got called, and now we got to leave, but maybe they can sneak back into the basement for 1 or 2 more beers. You know what I mean? That's the psychology of where we are in the market at the moment, is the cops are still upstairs. So it's more likely that the price is going to correct, because that's what it always does. What it always does is, even when we see strength above the weekly SMA, something brings it back below for a long period of time until we are finally able to break that trend. Now, a lot of times it happens at an alarmingly similar time of year. There are a number of factors that cause that, but until proven otherwise, I'm just going to pay attention to the things that look very similar. This is one of the only other instances that we have of a significant divergence from the rest of the patterns, this being multiple weeks above the weekly SMA. So that's something that I would like to highlight now. Oh dear God, is what would that look like for us now in the scenario where we would spend multiple weeks above the weekly SMA, but would eventually still break back below the monthly SMA? Because that's the important thing I think we have to remember about the 2019 cycle, is you were not going to get, let's go back there real quickly. You were not going to get these prices at sub $4,000 per Bitcoin. You were not going to get that forever. However, you would get multiple opportunities to get it sub 7,000, which is still great. It's obviously not quite as much, but it's still great. And that's very similar to that initial drop down range. So what that means for us, in my opinion, is that we are going to see 60 to 64K again, probably, even if we have an extended period of time up above the weekly SMA, which currently we are seeing weakness. Now, it's only Wednesday. We still have plenty of time and multiple YouTube videos between now and the close of this week. However, this is the weakness that we were expecting to see at some point, just given the overall shape of the chart, where we had a long push towards it. We had our initial break of both the 76.2K Fibonacci pivot as well as the weekly SMA. It got pushed way down before that week could close. The next week opened strongly and confidently, again breaking both the 76.2K Fibonacci pivot and the weekly SMA. And then the next week retested it, broke down below it, and basically was completely flat. Like, we are lucky that that resulted in upside. And what we may be seeing now is that upside may be running out. So we would need to have a significant amount of buyers step in at this point, and we need to just accept the reality of what the chart is telling us. So this is the higher time frame, but this is essentially the same thing. This is the middle band of the downtrend anchored VWAP, and it's at roughly the same level. I think it's a little bit lower on the higher time frames, but again, colloquially speaking, 83K is what we are paying attention to. The other thing that we need to pay attention to is the anchored volume profile over here, which is also a free tool in your trading view. This is the living, breathing human beings who press the buy or sell button at these levels. This is the living, breathing human beings who bought or sold at these levels. So what we are seeing here is a relative thinness at the levels that we are at, from about 72K to 86K, which means that there are less living, breathing human beings behind the buy or sell button with a strong emotional bias towards the price one way or the other. That makes it easy for the price to kind of idle and trend during these times, but then to be pushed very seriously by the people in here and in here that either have high or low conviction. So the possibility, and the thing that I'm going to be paying attention to on the chart, is do we start to see these people funnel out and this starts to thicken while this starts to thin? That will be very important. Now, if this starts to thicken and this does not thin, that means that these individuals did not get shaken out and that they are interested in the market going higher. As well as, if this continues to, I mean, it won't thicken unless we, break back down to it. But if it's to stay where it is, essentially, then again, that's these human beings who bought during better times. This is not someone who understood what was happening with the price. This is someone who understood with a degree of certainty what was happening with the price. Perhaps a bit premature, but I got to be honest, if you have a decent income, there's no good argument for you not buying a little bit of Bitcoin at 59.9K. The only reason why I wasn't like super loud about DCA at that point is I do still believe we're going to go lower. Again, even if it's just back to there. I do think it's a little dangerous just to presume that, the lows are in October is priced in already. I believe that partially just because of all the narratives that are circling. Like, it's very common in 2014, 2018, 2022. There was always some narrative that was either very positive or, in 2022's case, very negative, that led the general sentiment of the market. And then once the confirmation of that news had been set in, the market reacted negatively to it. So that's what I think in our case is that we're just kind of seeing a trend up into the Clarity Act confirmation. And then we get hit with the reality that the liquidity doesn't arrive until the stablecoins are working at, peak production, which means that you're getting little pamphlets in the mail from JP Morgan Chase to use, X amount of stablecoins to get X amount of bonus. Once we've had a while where that is accumulated, where they have X amount of their clients who are actually utilizing it, that's when we will see a big pump. So what we're seeing now is just kind of general anticipation and excitement over that news. And people with a lot of money love to wreck people who are impatient, So that is my gut inclination, is that if we are going to see weakness here, that it'll be on the weekly SMA. We've already seen the weekly SMA break down below the 76.2K Fibonacci pivot, meaning the next time we interact with the 76.2K Fibonacci pivot, if we do not see it formed as support pretty readily, then we're going to have another action with the weekly SMA, which typically does not end favorably for the price of Bitcoin outside of, again, that one example that I gave on the chart of 2014. And that anomaly, I believe, was about 13 or 14 weeks. We're on week number 4. So this is actually more than any other time on the chart other than that 2014 anomaly. I believe the other instances were like 2 to 3 weeks. So we're already kind of knocking on the door where another retest is like something that the price wants to have confirmation of. Now, it doesn't guarantee that it's going to break significantly below it, but that's what it does every other instance when it retests it after breaking it in a bear market year. So we kind of have to assume that that's what's going to happen. Again, combined with everything else that I told you about 86K being where the volume profile really thins out quite a bit, and 80 to 86K being a key psychological reason, primarily because of these people who were zealous enough to buy during the 2025 dip, but also the people who bought into the ETFs initially and saw 74K and higher act as resistance. You got to remember that we are essentially currying the psychology of all of the ETF buyers, all of the people who were late to Bitcoin but think that they needed to get involved, and the people who are mega rich in Bitcoin who started to sell it at that point. So And those are the people who are more educated, essentially, are the ones who are selling at that point. So if we are going to see a complete change of paradigm, what that would look like is we start to show strength again here. We don't need to go back to the weekly SMA. We instead start to show strength at around the 83K level. That allows us to start getting weekly closes and monthly closes above 86K. And then, in my opinion, we're still not really going to rise higher than potentially 96K, with the weekly top of the Bollinger Band currently acting as resistance against that even being a possibility. We don't have any instances in a bear market year where we break the top band of the weekly SMA, or the weekly Bollinger Band rather. We don't have it. It doesn't exist on the chart. Anytime that we actually do break it, it's after a period of compression and significant downside, where we didn't get to it. We failed it, Same thing here. We didn't get to it. We failed it. We had compression. We still failed it. So we have not seen that compression yet. So we're starting to see a little bit where it looks a little bit more like consolidation on the bottom side, but that is the price is trying to correct to the downside. So at some point in the next couple of weeks, we're going to see enough compression on the bands where we're going to get a strong reaction to it. It's my gut inclination that is more likely to be to the downside than the upside. Again, not impossible, but just kind of going based off of history, that's what we have to assume in this circumstance. Now, obviously, every market cycle is different, but typically it's just the news stories that change, not really the price behavior. And for anyone who's saying that the 4-year cycle is dead, I don't see that reflected on the chart at all. You can let me know in the comments if you are of the opinion that we have seen a major paradigm shift and that we're in the process of that. I'm happy to hear your evidence crediting that as such. But for the most part, I would assume we're going to see a breakdown. As this is interpreted as weakness on the higher time frame of that 83K level, which will trickle down to the lower time frames as well. And again, once we have an interaction with 76.2K, that is going to be what really decides how much momentum we have going into a retest of 73.8K. But 73.8K is kind of, for me, is like the lowest I can really believe we can continue. Like if we break down that means that's a break of the 76K Fibonacci pivot as well as the weekly SMA, which is currently sitting at 75.8K, and for all we know could be at 73.8K by the time we interact with it. If this does chop around for a couple more weeks but the weekly SMA continues to drop, there's nothing that is necessarily preventing those two things from being the same event, which could result in 73.8K being enough support that we just continue up and to the right. Again, hard for me to believe that we're going to break 96K though, even in that instance. Though technically, if we are just seeing 2019 start early, we could rise as high as the 106.8K Fibonacci pivot, in my opinion, slightly breaking 100K. I just feel like that probably sells less newspapers, and the Nudia Mies team, the media news team, doesn't get quite as much gasoline out of the Bitcoin is never going to go below 100K narrative that they were pumping in June, July of last year. I think that narrative has more gasoline if we fail at 100K. If we break back 100K, who cares? No one's going to fall for the Bitcoin will never go below 100K again narrative. They just used it and they saw already. But we build more credibility around that argument, or rather, not credibility, but more kind of psychological bias towards that argument if we rise close to it and fail it. So that to me is the only feather in the cap of the argument that we are going to see higher prices, which I have seen some people who are much more successful traders than I am, giving that opinion that we could see 90K, 100K plus. I would assume they're just trying to appease their followers, and you guys know that I'm not doing that. I'm just telling you what I think is the truth. So I don't see that personally reflected by the chart. If I do see that, it'll be because we have consecutive strength above 86K, period. You show me that, all right, cool. I'm open to hearing you out about us going higher. Until you can show me that, I don't think it's reasonable. I think it's more likely that we're going to break down below the 76.2K Fibonacci pivot, as well as the weekly SMA. So Other than that, same thing. Is 70.3K is the midpoint of that range. That would be the kind of the last point of support. But I got to be honest, if we're touching that low, then 73.8K has kind of lost some of its power, and I would assume 76.2K is going to be confirmed as resistance at that point, even if we do bounce that low. 73.8K, I can believe we can get back above 76.2, even though again, it would be more likely that we fail that reattempt or get as high as 80K and then fail. So historically speaking, we still have bias towards the downside. So how the hell do you trade that? What the hell do you do with that information? So I'm currently not in any perp trades. However, technically speaking, that's a beautiful short. That's another time to add to your short. And if you had taken that, let's double check. Thank you, Sticky Keys, so helpful. So it's a little bit higher than that, but you'd be at like a 4.5, almost 5% trade depending on where you entered that. So 40 to 50% on your money, very, very good. That's the reason why I talk about this strategy all the time. And for anyone who's unfamiliar with this or hasn't watched this part of the videos before, what I'm looking for when I'm looking for an entry on Bitcoin, this can be applied to spot, to leverage positions, really whatever. I use it for the perpetual contracts on Coinbase, just in solidarity of telling you what I'm using this analysis for. And what I'm typically looking for is two candles that are kissing each other that have broken the 4-hour Bollinger Band. Now the ones that are clearly outside of it, those are your bread and butter. Those are the best ones. Those are the most clear that you're gonna get a reaction to the opposite side. And that is based on my, my back testing. I did about until I want to say middle of last year, essentially, where I took a look at all of the different candle breaks and tried to see how much do they follow the same trend. And based on what I saw, it's about a 79 to 90% probability that the price will react 1% in the opposite direction after a Bollinger Band break in general, but with a closer to 90% probability when it looks like this. When it's a candle that climbed high and then started to show weakness at the same level where the candles, or equivalently the same levels. Like this guy is technically, this candle opens slightly below it, but it's close enough where you can see that they're matching each other essentially. Whereas this one, I wouldn't categorize that the same way. It is one that is like a fuller body candle. And this is the issue, is where do you enter it? Do you enter it in this candle or do you enter it in this candle? That's kind of the beauty of the 4-hour in general, is you've got a while. Typically, once you see that these guys have lined up, it doesn't really matter if you enter here or here, other than in this context, the reaction to the anchored VWAP is important. But if we're just kind of going based on candle action and not paying attention to the rest of our indicators, that's what we're looking for. Is we're looking for full body of the candle has run out of room, and now we're going to try and catch the opposite side. Now, the beauty of this is I designed this strategy primarily as a scalping strategy, because again, in most instances, it'll go at least 1% in the opposite direction before continuing. And then it really just comes down to your exit philosophy. So for me, your entrance philosophy is primarily just based around when you got clear candle entries outside of the Bollinger Bands. Outside of the Bollinger Bands is much less common than inside of the Bollinger Bands, making it a more precise target for you to aim for with your entries. Now, I don't give like specific entries in my group. We just kind of talk about, how is the price behaving around those levels, but that's what I'm looking for. That's the strategy, is to look for 4-hour candle breaks that are kissing, that are outside of the Bollinger Band preferably, but this one's just as good, honestly. And sometimes it's going to be a scalp that is quickly, you need to get out of it based on exit criteria. For me, is typically either an arbitrary 1%, just because again, that's what the probability tells me, is that an overwhelming amount of those trades go out at 1%. So what that means for me is if you're going to buy 10 contracts, then probably 3 or 4 of them should be taken out at the 1% level. And then you let the rest of them run, and you just pay attention to, in this case, a reaction to the weekly SMA. This is not financial advice. This is, again, just been my experience with it. Or not the weekly SMA, sorry, the 4-hour SMA. Or, again, the opposite Bollinger Band. So like in this instance, for example, if you entered here, you could have closed it. You could have closed it. You certainly could have closed it. But really, this is your last opportunity to close it before you start to give up your profits. So I think it really just depends. And it comes down to, you got to be able to layer your position. I was upside bias for the majority of this run. I had high confidence that we were going to get to the 80 or 83K level. I did end up selling before that, kind of mixed with, I think I was focused a little bit too hard on the run ending by the end of April, which is kind of arbitrary. It doesn't really matter. It's more levels based. So I'm going to try and keep that in mind moving forward. And that's why I articulated what I articulated earlier in the video, or what I'm really paying attention to is things like 76.2K and 73.8K. And I'm going to make decisions based on reactions to those. So this is not a clear short entry. This is actually a long entry. This is a clear short entry, so if you've already shorted from the price there, then you have nothing to do right now but just kind of wait. And again, that I can believe that the price would run as low as 73.8K, depending on how we react to 76.2K. And again, the longer that we react to 76.2K negatively, the more likely that the price is going to start to shift back towards the downside, towards 64 and 60K and lower, potentially. So me personally, what I'm waiting for now, probably going to be confirmation of the middle band of the anchored VWAP again. If I start to see weakness there, I may take an irresponsible short trade, just based on the momentum. I am articulating that as an irresponsible trade because, again, what did I just explain? These are the only entries that we want to take. Why would you take anything other than those? They're just the highest probability. It makes it a lot easier for you to lose less money with your trades and just to be correct. It's great. So in our particular instance, this is a long, actually. Would I take it in the middle of the candle? Probably not, But if I had been paying attention right there, that's when I would have taken it. And again, me personally, I'm waiting. I'm probably not going to take any trades for another week or two. Other than, if I really want to jump in on scalps, I can, but it hasn't been a huge priority for me while we're at again, I've been talking about a rise to 80 to 83K since February, since January. So for me, I want to be very clear. I want to pay attention. I don't want to have too much money tied up at the moment, other than just my spot Bitcoin position, which it's very rare that I trim. Philosophically speaking, I only sell my Bitcoin when it dramatically improves the quality of my life. So you can do whatever you want with it. That's the beauty of Bitcoin. But that's what I'm looking for at the moment is, do we see weakness on the middle band of the anchor VWAP? That would indicate that we are probably going to go lower. It's not a clean short entry. However, it would kind of be an early sign for me that we are going to head lower. And same thing, unfortunately, for 76.2K is not really the clearest short. So it's mostly about, how much you think is likely that we're going to retest that based on, we had a similar pattern over here where we had our initial local high right there that then we had a double failure on, and then that brought the price lower, but was still able to recover. So that's really what we want to look for now is, peak to go away, sticky keys here, not helpful. From the peak of that to the peak of that is about a 5.6K drop. Not really that crazy. Come on. Thank you so much, Sticky Keys. You're very helpful. We still could go a little bit lower than the 78.2K Fibonacci pivot. Again, let's just call that colloquially 78K. So if we show strength at 78K, there's still potential of a bounce higher. And again, the most I could believe would be 73.8K, but it's kind of hard for me to believe we're going to resolve to the upside if we do break as low as 73.8K. So that's what I would be paying attention to at the moment, locally speaking. Again, just the middle band of the uptrend anchored VWAP. This is the elder VWAP, as I like to call it, from 2011. That's 80.2K. And then again, psychologically speaking, 80K, 78K, 76K, 74K, all very important. If we start to see more weakness and a breakdown towards that 76.2K Fibonacci pivot level, that's going to be a lot of information for us. But again, with the historical context, we would typically expect the price to continue to break down even after this breakout and showing of strength. So that's what I'm looking for. Let me know if you have any questions down below. Thank you guys so much, as always, for watching these videos. It's very helpful for me just to be able to collect my thoughts in a public forum. Yeah, have a great day. I'll talk to you on Friday.